Hello, everyone. Stephen Furness here, Director, MGD Wealth, and in today's capacity, Chair of the MGD Wholesale Investment Committee. Wonderful to have Steve Gross here with us again. Not sure your exact title, Steve, but I'll call you Chief Investment Officer of Palisade Impact.
Yeah, thank you. Honcho, Guru, any of those will work. But I think founding partner's the actual title. But
Right, founding.
Yeah,
Founding
CIO
partner.
sounds like I do too much work.
So this is early December. This is a recording to give existing wholesale investors in the Palisade Impact Fund an update on what Steve and his team have been up to. From a legal point of view, just a reminder, this is general advice only, not to be taken as personal financial advice. Obviously, the clients and myself and my MGD private team can chat to you offline about anything that's come up today that you've got queries on. So thanks, Steve, for your time. I'm just going to share the update pack.
Okay.
That you were kind enough to send through. Hopefully that's come up.
Yep.
So yes, let's run through it. This update pack is as at current month or end of November.
Yep.
I'll drive. You tell me where to go.
Yeah, sure. Sure things.
So how many years into it? What are we into now? This is 3 or 4 years now. Is that right, Steve?
Yeah, that's right. And you guys were the first, if not the first, certainly in the first two investors. Yeah, so we've been going 4 years. Sort of put up the shingle in October 21, closed the fund in, I think it was April 22 with 450. We now manage across the fund plus co-investments about 860, part of which is sort of just growth in the underlying portfolio. But yeah, I think we've raised about 300 million over that period as well.
So I think we're up, if you include a little bit of distribution, with initial investors are probably up 30%, give or take.
That's right.
Yeah.
That's right. I think it's
total return.
Yeah, that's bang on. So the sort of thematic that we're seeing is, across the portfolio, we've invested in 5 platforms. Those 5 platforms are invested in retirement living, embedded networks, which is sort of small scale renewable utilities, digital infrastructure, a waste recycling business, and then some community solar as well. And we closed out those platforms at the end of the 2 of those platforms at the end of 24, and the strategy was very much about growing those platforms both organically and inorganically. So acquiring bolt-ons into those, as well as ensuring the businesses grew themselves. And our strategy is very much to work our own networks, but using the networks of those businesses to source opportunities. And the last quarter has very much been the manifestation of that investment in those platforms. And it says 3 bolt-ons, but in the last couple of weeks since we had this meeting, we've now signed 6, including those 3. Those 6 investments, at least 5 will close this year, possibly the 6th, and that will help us deploy about 150 in the fund, which we will have some capital left over, but that capital is contractually deployed already in these opportunities, but just in tranches. And that was a bit faster than we expected, and just the opportunities we saw were executed faster than we expected.
So just for context, Steve and I've chatted to three times in the last couple of weeks, so getting a good handle on where the fund's at. The fund is you're doing most of the way through a fundraising strategy now for these what you call bolt-ons.
Yeah, correct.
And it sounds like you're getting a good response to that fundraising, which is
correct.
Which is good. The fund is open for new capital.
Correct.
We might, maybe just interest of time, is this a good slide to talk about existing platforms and what you're doing?
Yeah, no, for sure, Steve. So we can definitely focus on this one. So if we look at the sort of portfolio at the moment, this doesn't include the bolt-ons on the left-hand side as part of the portfolio. So that now is about 690, and the energy, all of the, aside from Pure Sky, all of those slices of pie are now larger, in terms of Repurpose It, Energy Locals, and IP Living and Gearcom. And if it's worthwhile going around the houses, Steve, just in terms of what we've done in each.
As a reminder. Yep.
Yeah, that'd be great. So in terms of Repurpose It, Repurpose It is an organic waste recycling business based in Melbourne. So Repurpose It does two types of organic waste. It does C&D waste, which is basically excavation waste from construction, brings it on site, washes it as an alternative to landfill. And then the second is it takes residential organic waste, so your green bins, your garden waste, your food waste, and it composts that. And in both cases, it takes those, recycles around 99% of what goes on site, and then converts it into products that can be reused. So that business, the underlying business, is going well. And in addition, we've signed 2 new bolt-ons. Those 2 new bolt-ons basically make it a more diversified, vertically integrated business. Again, based in Melbourne, but there's a view to go interstate at some time in the future.
And the revenues are government or council contracted revenues, is that right?
Yeah, a range. So it's typically the revenue on the organic side will be council. The revenue on the C&D waste is typically with private collection companies who bring the waste from government projects and others. So that one's going well. Gearcom is a last mile fibre business. So in Australia, about 2.5 million apartment flats do not have access to high-speed internet. They have old technologies. Gearcom basically goes into those, overbuilds fibre, gives people access to gigabit speed and above at a good price, and really is sort of tackling those. So there's an opportunity. So we've just invested some more capital to help continue to build the network, but also to look at a number of bolt-on acquisitions in that, which is a strategy that we're sort of really kicking off now. So that's progressing well. We've drawn some capital to fund the first tranche, and then in the new year, we'll deploy the rest of that capital in that business. Pure Sky is a community solar business based out of the US. In my view, it's the best sector to invest in the US from a sort of renewable energy perspective, because you're effectively helping people pay less for their energy, but greener, which obviously is a bilaterally interesting government thing for people to reduce people's cost of living. That business continues to grow well, continues to bring new energy and capacity online, and I think has gone through a period of regulatory change and has really come out the other side really well. And so very excited to see what that's going to do. IP Living is our retirement living platform. So IP Living owns 4 operating villages and 1 block of land adjacent to a village. It basically provides homes for retirement people living in retirement, very much an infrastructure style of cash flow where benefiting from the silver tsunami. So people getting older, needing a place to live, being asset rich but cash poor, it allows people to gain more money, but also to access better services and healthcare to live independently for longer. We recently signed 2 bolt-ons for IP Living, and we'll close that next week. And we're close to signing another opportunity in exclusivity in the first quarter next year, as well as the development of that land parcel that I talked about before. So, sort of 50 million of equity will need to be deployed into that in the first quarter next year. Energy Locals is our community energy network business. So Energy Locals basically provides in apartment buildings. It owns the entire energy network. So everything from your electricity through to gas, through to hot water to air conditioning, and manages that as part of one parcel, including sort of rooftop solar energy and batteries, and on very long-term contracts in terms of each building. That business, when we bought it, had sort of 3 businesses, the big one being the community energy network, but then it had sort of 2 much smaller businesses. One was an energy broker and the other was a retailer. We sold the broker a couple of months ago, made a good price on that, and then also sold our retailer to Origin yesterday. So the business is now exactly where we want it to be. We've simplified it. We'll use that capital to reinvest in new bolt-ons into that opportunity. So I think the portfolio has really taken on a lot of activity. All of those bolt-ons, we will effectively be deploying 150 mil by the end of this quarter, for the quarter, and have about 100 million of opportunities for the first quarter next year. So we're fully deployed and need to raise capital, as Steve alluded to earlier, to invest in those new opportunities. So the updated version of this will see a much smaller number on undrawn commitments the next time that comes out.
Okay. And just sort of a reminder for all of us, where can you take this strategy in terms of level of funds under management and say over the next 3 or 4 years? What's your hope for it?
Yeah, look, I think in sort of 3 years' time, I think we can get this close to 3 billion. So I think by next year we'll be close to 1 billion, and then you get the exponential impact of growing not only by deploying but growing in terms of the growth in the underlying portfolio, which we've seen. So in that couple of year period, we'd expect to see sort of 800 of that growth come from just the underlying portfolio, and the rest in terms of deployment. So in 3 years, I'd expect we'll be raising something like 300 to 400 a year in each of the next few years. That capital being deployed, so 1.2, and then the balance in sort of growth in the portfolio. So I think that's very much a fair target for what we're doing in that period.
You've obviously got some good institutional partners there. We can see those logos there, so that's has to be a positive. Just are there platforms that at the right price and opportunity, are there other platforms you would like to build out in the strategy? Yeah, no, it's good. It's a good question. So this is our big debate at the moment. What we're seeing in terms of bolt-ons is that they give us really good diversification. Relatively small businesses, that have
the factors are very uncorrelated between assets. So we're getting that in-asset portfolio diversification, and we're very lowly levered. So it really, the risks that we have are just the business risks, and which are sort of very specific to the asset. So we get good diversification there. And then the question is, given the opportunity set we're seeing, where we're able to deploy in a quarter 150 million at returns that are in excess of our current discount rate and certainly the target on the fund, to the extent we see a really good pipeline of that continuing, I feel that's a good place for investors to target. We're not sacrificing diversification. We're definitely getting really good access and returns. But we do have our eye on and are investing time in looking at different opportunities that we could create platforms out of. So, water is an example of something we've spent a lot of time on, but it's a sector that's generally publicly held. You don't have a lot of privately owned water companies, and those that are kind of not infrastructure. So we're sort of investigating that and sort of seeing what we can find. We're also looking at non-organic waste type companies. So are there things that we can do in sort of harder wastes and how they can be recycled and repurposed? And there's a few opportunities in that space that we've been looking at. And then we sort of continue to look at what we can do in some of the other digital sectors, for example, albeit I think it's we're in the best price, best risk adjusted returning sector at the moment, because I think data centers are definitely benefiting from a very powerful tailwind, but it is you're betting on the tailwind, and we won't know when the music stops until it does. And so I think this sector of that we're in, a last mile fibre, I think is a good place to play in Australia, given the size of the digital divide here. So it's something we're very close to, but we're very busy on what we can do in the existing portfolio.
Yeah, very good. We better not talk for too long, but lots of private equity has that J curve, write down period early on, which you've largely avoided. So 8% doesn't stack up for private equity risk reward, but there's no guarantees in life. But you're pretty optimistic about the return profile for our patient investors that have been there since day one.
Yeah. So if we look over the last 12 months, that number's 10.5%. And the reason we're seeing that step up is twofold. So one, the recent investments that we've made, and most of our capital has been deployed over the last 2 years. Repurpose it was 18%. Gearcom's 20%. IP Living sort of mid-teens, and Energy Locals was at 18%. And Repurpose at Energy Locals and IP Living have all been deployed in the last 2 years. So you're starting to get the full year benefit of those coming through. So that's part one. Part two is if we look at the capital we're deploying, if we look at the underlying returns or average discount rate of the portfolio, it's about a net 14%. So assuming we just are able to roll forward and hit what we think we should, then that's in the ballpark, and that's sort of 13 to 14%.
Yep.
And then if you look at what we bolted on, it's all in excess of 14%. So it's in the 14 to 17% range. So again, that implies an element of risk, but because we have such a low level of leverage, we have a high growing businesses, but we're not beholden to our capital structure for the returns. So, it feels like just the maths alone sees that number rising. Even if we don't perform exactly like that, it's still higher than 10.5%.
Yeah, very good. Very good. All right, mate. We'll circulate this pack. We don't need to spend too much time on it, but also clients can always come back through me with any specific queries, and I can get back to them. So,
excellent.
As always, Steve, I really enjoy our interactions and relationship, and good to catch up. And let's hope you continue to smash it.
Thank you, mate. All right. Good luck. Thanks, everyone. Appreciate your time, Stephen. See you.
Cheers for that.
Bye.